Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is December 6, 2022, and today is Tuesday morning. So looking at the highlights of the day, the U.S. markets retreat for the biggest amount since the beginning of its rally of October 13th. But first, major economic events scheduled for today. So at 5:30 earlier this morning, we had out of Australia a cash rate decision. We're going to take a look at the Aussie dollar in just a second, looking at the Forex symbols. US dollar slightly stronger versus the major pairs as the Dow Jones and the NASDAQ both sell off. Looking at commodities, gold and oil both sell off as well. Now looking at stocks, JP Morgan is really on a key level, a key support level that is, and ALCOA breaking lower. Is that signs that the markets is starting to shift on the downturn? We'll take a look. And lastly, looking at Bitcoin, slight retreat to 16,900-ish level, but not a big deal. So let's take a look at the markets and see what we can expect from today's trading. So here we go. We're looking at the USD, Euro USD, and you can see that slight retreat. No big deal, okay? But there is a retreat here. If we look at the different forms, looking at the Australian dollar, we got a little bit of a perk this morning after the rate decision this morning, but still, the dollar getting stronger versus the Australian dollar, as you can see here, going from 68-ish level to 67-ish level, 20. So a decent move, a retracement there. If we look at the GBP, also a slight retracement there, and the Japanese yen, okay, finally bouncing from that 133 level. Now that 133 level is actually very important because it's a supportish level. So bouncing off of that 130-ish level is actually significant, which means we may be trading between the 139 on the top side, maybe just slightly below that as we find ourselves in new footing. And jumping into commodities, both commodities did tank yesterday. Starting out with gold, had a really hard time at that key level, that 200-day moving average level, as you can see here, and that was previous resistance. So very simple trade here. I mean, just at that 1808 where it capitulated down to 1772. Not a big deal, but a decent trade if you did take it on the downside. Now, it didn't sell off with massive kind of volume, so I just see it trading sideways still, so nothing to really celebrate as a new trend down. I just find it at the top of the range. It's still at the top of the range. If we look at the micro range, it's between 1800, 1808 and 1734 on the downside. So, you know, we're still in that real tough range in order to trade, and right now we're right in the middle of that, so no big, you know, easy trade looking at gold. Looking at oil, we tanked yesterday from $81 to $77. A nice little retracement there. You know, again, it's very choppy. I mean, especially oil. At least you could, you know, say by gold, it's trading within a range, 1808 to 1734, but oil, really not. Okay, this bounce was just a dead cat bounce. It was like a double top and then trading right back down to its lows. So this may be an indication that the rest of the market will do that as well. Now jumping into the U.S. markets, the Dow Jones yesterday sold off, you know, quite aggressively. Okay, whatever gains we had from last Friday, we gave them up. Okay, we're about 400 points away from those gains before the FOMC statement last week. So yeah, is there room on the downside? There is, but we have a lot of key areas to break before we get there. Okay, namely this 34,000 is a level that is a supportish area. So if we don't breach it, we will bounce off of it. Okay, so that's something to consider today. Also, if we look at the volume, it was a massive kind of volume kind of selling off. Okay, and where I would have expected it to have, you know, a lot more, you know, volume at these areas, it's not. It's an average volume. So it may capitulate, it may not. But just remember your key levels. 34,000 is a key level. 34,900 is a key level. Okay, and then 33,100 is a key level. And then beyond that is just, you know, the next level down. But keep that in mind as we're going into next week. It's going to be quite an aggressive week because on December 13th, we do have that CPI number coming out, the monthly CPI that everybody's paying attention to. And also Fed rate decision next week where they may increase interest rates depending on what's going on with the current inflationary situation in the markets. I'm looking at the US, the NASDAQ also sold off. Nothing big, but it did sell off. Okay, a decent sell-off there. as it's retreating on the downside. But this did sell off with volume, as you can tell here, most of that sell off. And secondly, you have this aggressive 8-day moving average that's coming very close to the 30-day moving average. If that's a crossover, that's a clear indication that it's going to get weaker, and I would look to short it at the next bounce. Okay, so that's something to consider there as well. Now, jumping into individual stocks. Okay, so JP Morgan is on a key level. Okay, on the 30-day moving average. Okay, so if it doesn't breach it, that's going to be something interesting. It's going to bounce off of it, but that's something very important. Okay, once it sells off quite aggressively, went from 140 to 130. That's a big move. Okay, that's actually almost a 8% move on the downside when the markets has been relatively strong. Now, looking at ALCOA, it did breach the 30-day moving average, and this is a little bit more worrisome on the downside. So there may be some selling pressure on the downside as we move into the next couple of days. Now, jumping into the individual stocks, Apple did sell off a little bit yesterday, okay, aggressively on that upper range. Microsoft also sold off, but didn't cross over, okay, so it's still there and still showing some life at the end of the day. Amazon, which we've been covering, has been relatively very weak. Now, lastly, looking at Bitcoin just selling off, but nothing aggressive, really nothing to go by besides the fact that it's almost a double top and got closer to the 200-day moving average. But again, it's so choppy with Bitcoin right now that it's a little bit hard to tell which way it's going to go. I mean, figure this. FTX has done its damage on cryptocurrencies, okay? What's going to happen next is a big question. So keep that in mind as we're going into the next phase of cryptocurrency stage, or we'll call it the next stage of cryptocurrencies, because it's going to be some regulatory body that's going to have to come in and kind of subsidize the markets. This is Fred Razak. I want to wish you guys a great trading day. Thank you.